is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, Eastern Time, market days, right here at 877-927-6648. Very interesting market, this. Early on, there was a sudden sell-off that was pre-market, looked a little scary there. Then we heard about the euro plunging, had questions about that. We're going to go into it. I'm going to start off right away with two questions I had. So let me give you the numbers first, and then we'll go right into that. At this particular point, the E-minis are trading at up 750. The S&P is up 810. So there's a little lag. And yesterday, the E-minis throughout the day were very much weaker than the general market, and even definitely the S&P. So this is very interesting. We've got the Dow at 16,585. 16,631 is the level to get to. 16,632 will be a new all-time high. I suspect we're going to get there. Real struggle to get there. There's something very different about this market. I like to say that markets love, well, we can call it indecision. But it's really, they do not like indecision about indecision. And this market is in that indecisive mode right now. It's fascinating that there are very strong sectors. There are also very weak sectors. Yesterday, I spoke about, right at this time, I had a great question from John from Philly. We were looking at the NQ, the 30-minute chart. I wonder if I've got it right here. The 30-minute chart. And basically I was saying, yes, in the analysis that I have, that was what I call a rogue wave to the downside, and that there should be a bounce back up. And let me just find it right here. I wonder if I've got that chart. It'll be fascinating to see where it is right now. Yep, there it is. And in that particular instance, in that 30-minute NQM, you remember the NASDAQ was still getting hit very hard early in the morning. I'd say that there was a chance, there it is. This has the potential to be a Chapman wave, rogue wave to the downside. And lo and behold, what we're looking at is that there was not a V-shaped pattern, but that arch pattern, which actually became a little mini, almost like a mini M, but then it broke above. And what I say is if it breaks above the high, we didn't know at the time, but if it breaks the high of the arch formation, in this case it was the high of, if I can ever get to read these green background, 1534, was the high 35.34. If it broke above that, that would be a positive. And lo and behold, where are we trading right now? Way above the entire move from yesterday in the, again, hard to read, 35.44 area, back at about 8:30 a.m. So here we are just 25 hours later, 26 hours later, and we're looking at leg A starting from this morning's low in the 35.18 area. And where are we now? We're in leg B in the 30-minute chart. That's a very positive aspect. What I'd also said was, and a number of people sent me emails commenting on this, that LinkedIn, I can't believe it. I had written this down. I had put it everywhere, and I actually put it onto my Traders Corner for my subscribers. No, I meant to put it on, and I forgot. Because it wasn't written in, my mind was so active going through all these different things. I had prepared, it's so silly. I had prepared an option trade, a call option on LinkedIn for the 150 call, which would have been just fabulous. And it just, I couldn't believe when I'm looking at the market at about 9:40, and then I looked at an email and we were talking about LinkedIn. Very good comment. And the comment was, let me find it. I like this comment. Very good. John sent me an email. There's another John. Great call yesterday, Basil, on LinkedIn. No position there, but it's fun to watch. I've moved into Google. Here's one for you. I see Google as the GE of the new millennium. They are in all sorts of things globally. But I'm not a plunger. I'm a value seeker with various positions, and he says he's in many different equities. So I cannot disagree at all. For the 21st century, a company like a Google, and I've spoken about this for a long time. I've said we are looking at companies now that are the GEs and GMs of the 1920s and 30s. That's a great observation. So LinkedIn is doing beautifully. It's up 7.5 at 150.67. Couldn't even have got in this morning. It went below yesterday's close. Just completely forgot about it. Anyway, we do have another issue that we've got into, which is just starting to move very nicely, way lower priced. I'd say that we're in the triple digits here. We just got one in the very, very tiny single digits. I have no idea, but it's a biotech, which I think could participate if the biotechs do pick up a little steam here. We'll see. We'll see what happens. So numbers. Let's see. A question about that. Let me answer that question now, because this is part of what we like to do here, is to answer questions, especially if they're technical questions on the Chapman wave. Why? You're absolutely right. I'm sorry. I always say go to the lowest low bar, because you cannot start any count without knowing that you're at the low bar. I meant to go back. This is the same as what I'm doing here when I do my opening call, which I start the previous day all the way through the afternoon, all the way through the evening, and then into the early morning hours. But if I do not write, I found that if I do not type in what I'm looking at, I've got so many things going on with different chart patterns, different things that I'm doing, maybe trading, whatever it is. It'll just slip my mind, which is just dumb. There's no excuse for that. So thank you, John. Yes, this is leg D in the 30-minute chart. Thanks for reminding me to always look back to the lowest low bar. So the numbers are, the Dow's up 59 at 16,578. The S&P's up 7 at 1885. The comp index is up 34 at 4102. You've got the gold. Now, this is really interesting. Gold took a plunge yesterday. Right now, it's like unchanged at 1289. Silver also is down a little bit at 19.22. High-grade copper is the thing that I just keep on looking at and saying, you're a mystery to me. I'm 100% correct whenever I say that copper is in a trading range. I mean, there's nothing wrong with that, right? How can you be wrong? It's certainly in a trading range. But it's not giving, look, it went to that peak E, doji top. It's pulled back. It's holding up. Let me put it this way. Copper is holding well. Certainly the weekly has done fabulously. I'm just talking about the daily, the way it's just bouncing around here. But it's acted reasonably well in the weekly chart. Monthly chart is still horrible. The daily chart has been very good. It's this consolidation that is saying to me, hey, if I don't want to hang around in this trading range between 3, this is copper continuous contract, and 3.1, I'm going to break out. And the pattern that I'm looking at says it's a good chance to break out to the upside. That'll be a good market positive. So let me quickly go to the bonds, USM 14. Up very strongly, up 20 and 32, 20 30 seconds, at 136 and 1930 seconds. Funny vintage going back to those 30 seconds. So we are looking at F/C. I'm going to call it C because the technicals are so strong. So this is a new buy mode in the daily. In leg C, it should still go a little higher. Broken out above the resistance level. Very good action. We've got the dollar. Oh, I had a question here about the euro, and I'm going to get to it right this very second. The euro has plunged down to the 1.3850 level. What I'm going to just say is I'm going to let it rest for 20 minutes or so. I want to come back and spend a little more time on the euro. I had a question about it. There's nothing really to do now. You've got to wait for the dust to settle. Let's see if the 120-minute chart, I've got a peak E. Now, I've got maybe different, because my time frames maybe start at different moments than yours, the question from Peter, but it's right at the 200-period moving average in the 120-minute chart. It should hang around here for a little bit. That gives us time. So I'll be back. Let's go to our first caller. We got Mark in Denver. Hi, Mark. How are you?
Good, Basil. How are you today?
I'm well, thank you.
Good. So this is kind of like I did with Staples. I actually got in, even though it was on your Trader's Corner, and I got in quite a bit lower, and so I set my stop lower.
Okay, good.
I bought it for $685. I set my stop just under $660 at $659 because it looked like it was, at the time, it was trying to, it had formed a peak B daily, and I think the day we got it, it plunged, but I didn't get it until it kind of plunged. So I'm wondering, do you think it still has the potential to form a peak C and D on the daily?
You know, folks, we're talking about AK Steel. AKS is the symbol. It's trading at $6.97, up 17 cents. This is one that we've traded periodically in and out, but it's one of those that in the back of my mind I'm saying the late cyclicals tend to come on strong in an overall bull market. This is a mega bull market, but the most unusual mega bull market we have seen in the history of stock markets. There has never before been a Fed that has basically been saying, look, we have ordered an unlimited supply of ink. We're not prepared to let this market fail, and we are going to be there constantly by printing as many dollars, as much currency, as much support, as much cushion, as much trampoline action as we can. So I'm saying to myself, in time, I would never, after 5.5 years, be getting into the late cyclicals in what I call, this is a mega bull market, but even in just a regular bull market, because you think, man, time's up. Geez, if they haven't already moved, that's terrible. But when I look at the chart of the monthly, the way it's behaving, I'm kind of impressed at the robust action that it refuses to break under 640. It's just kind of stuck, though, in this trading range. And the surprise will be, and I'm going to put it together with X, which is U.S. Steel, which in a way has a somewhat similar monthly chart. Is that the music? Yep, that's the music. Give me a moment here. I just want you to finish some work on, I believe it was the AK Steel. Yeah, on the 120-minute chart. We'll be back with Mark, and I'll head straight after these breaks. The Dow's up 66, S&P's up almost 8 points.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi folks, Basil Chapman. We're back with Mark in Denver looking at AK Steel. AKS is a symbol, trading at 6.94. Now, there's a pattern that I'm showing you for if you're looking at Tiger TV. This is really important. There's a cup formation. It's kind of a cup formation. It's more like a bowl formation, and then what's happened is it's made the handle. The handle went back. It did pull back about 50%, and it's held so far. Now, this pattern should turn into a very bullish pattern because there's a chance that there is the H pattern within the cup formation. All I can say is it's a really tough pattern because it's taken about 2 bars and about a half a point to the downside, which has extended it to match the previous pattern, which says I'm taking about 25 bars to consolidate before I'm going back up again. In this case, you've gone to 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 bars. Actually, that was probably about 28 bars. So my eye says the daily is giving me the information that as a rudder, to make a significant turn in the weekly chart, it needs to power, and we tried to give it a chance the other day, and it's just pulled back. It's held quite nicely, but it pulled back a little too much. If it can go to 734, that's like 40 cents higher. Normally 40 cents higher in a $7 stock is a big deal. In a stock like this, the way it moves to the upside when it's starting to build momentum, it moves very quickly. So what I would say to you is, I think you got in at a great entry point if you got in below the 650 area. It's trading at 696 now. Give it another day or two. But if it doesn't If it's not able, see, today it couldn't hold the high of the day, which went all the way to 708. But the day's young. If later on there's another surge in the market, this should push a little higher. If by the end of the day, suddenly these cyclicals are back in favor instead of the momentum stocks that are starting to gain a little bit of traction from yesterday's low, then this thing should manage to move higher. I would just say to you, it could turn out to be dead money if it doesn't break above 710 to 712 by about Monday afternoon, Tuesday at the latest, because it could just be stuck in this range, except for the one thing, that the surprises have mostly been from the low area, the middle sixes. The surprises have been to the upside. And that's what I'm expecting. That I can give you two very good scenarios here. One is if the MACD, which is making a W formation, is able to cross positive, and the stochastic, which is at 58%, is able to get into the 68 to 73% area by Tuesday as it rallies, you finally got yourself the stock that we've been wanting for a long time, because it's going to make a higher cup in the right side of the weekly chart from that latest peak A, and if it does that, there's a good chance it's going to go. So, two scenarios. If it breaks under 650 in the next 2 days, I'd say, hey, I don't think it's going to work right now. I think it's just wasted money. But if, in fact, it moves higher to the 712, 714 area, the weekly kicks in, and I think you're going to get yourself a nice rally. Hope that helps you, Mark.
Yeah, good. And any reason you didn't jump back into Amazon yesterday or today? Yeah.
I was distracted.
Okay.
I can't believe if I had written it down in my Traders Corner from yesterday when I already started preparing, we would have just been there. We would have had also a beautiful option call. I had it all written, planned. I was sorry. What can I say? I was distracted.
Yeah, well, I grabbed that yesterday when it held its left side low, and figured I'd see that in your Traders Corner this morning.
Well, actually, I wasn't going to go for Amazon. I was going to go for LinkedIn, because that's the one that gave the round number low at 136. Right. So once you've got that, you know exactly where to stop. I wouldn't have had it so wide, but that would be key. So yeah. Anyway, thanks, Mark, right, and thanks for rubbing it in.
No worries.
Let's go to Nahid. Nahid, how are you?
Very good, Basil. And so that you don't feel bad, I was distracted too yesterday. I was going to put the option for CPA, and I didn't.
Oh. You know what? I always say to myself, Tom always says, there's always another trade. And we know there's always another trade. But it's that personal thing that, it's like you just got smacked on the nose when you had everything ready. But you know what?
Exactly.
Because your eye is on the ball, it means that you're going to do it again, and you'll do it correctly. So you want to look at CPA. I'll be right back. We can look at CPA, which has spiked beautifully this morning. It's up at 140.92, up 8.5. We'll be back with Nahid, and we will look at Copa Holdings straight after this break.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi folks, Basil Chapman, just doing the 120-minute chart of the of CPA, which is Copa Holdings. Now this is it's a publicly traded foreign private issuer listed on the New York Stock Exchange, parent company of Panamanian carrier Copa Airlines and Colombian air carrier Copa Airlines Colombia. So this is a very interesting stock. Every once in a while I come across it. I always think it's one of the online educational, but it isn't. That's the CCC, I think, is the symbol for one of those. But okay, so now essentially you missed the move, but you're still interested in the stock.
Yes, I am. I was thinking about getting an option, but I figure I'll talk to you first, and then we can talk about our disappointment and distraction.
Right. Just to make me feel comfortable, yeah. So now this is what I'm looking at. What I'm looking at here is that the monthly chart has made a peak F top with a very serious decline, and now it's making that. It's like a spring-loaded. How can I call it? In fact, it's better to draw it as I am always so visual. I would just immediately draw in a circle and say that circle is going to tell us a tremendous amount. Now, the airlines, as you know, but these American airline companies are just coining money. Not only are they coining money, but they are squeezing everybody. I don't know if this is the same case with this particular airline. So let me treat it just as a chart pattern. Normally, I would say, hey, if the sector is doing so well, this thing should go back to the highs. Well, maybe it's earnings that came out this morning, whatever it is, it's spiked up. It's giving back about half of the gains. Now, this is what I just said in the den. I even just asked about a stock called WAV, and this is the same thing today. Look, WAV, look at the chart pattern, same thing. You see the big spike, huge gap up, but it is holding towards the highs. That says to me that if WAV, which is called the White Wave Foods Company, in this environment where we're looking at the food stocks, companies like Whole Foods getting smacked, well, I'm saying to myself, this is really good action, because here you're at the highs. You've got the pattern that I call in the Chapman wave the falling axe. That's a declining cone formation. It looks like it wants to tackle the previous all-time high of 30.46. They have nothing to do with one another other than chart formations. But chart formations, for the very reason that they are fractals, tend to repeat in different ways and different time frames and different sectors, and a pattern's a pattern. So in this case, let's go back to your CPA, and we'll see that, look, it had the same spike. It's giving some of it back. It's in the lower half of the most recent trading range. So I'm looking at this and I'm saying, wow, if you were in it yesterday, if you were able to do one of two things, if you had options to grab your profit in the options and then look at possibly getting in on the long side, that would be one thing. But now you've stepped out completely. So this is like a fresh move. Normally, I'd say to you, Naheed, would you be buying a gap to the upside? Some people never do that. Now, my question to you is, do you do that? Is it part of the vernacular? Is it part of your plan that you sometimes implement? Because if it's not, then we've got to treat it one way. And if it is, I know exactly what we can do. So.
Okay, so, well, I don't, sometimes I do, sometimes I don't. But in this case, I don't know what to say, because it went all the way, I think, up to 144 even.
Today's high is 144.27, right.
Yeah. So I'm just trying to figure out, would it have another chance to get all the way up to...
Well, the old high was in the 160s, but we'd have to go one step at a time. So, okay, so this is what I'm going to recommend, because it has a pattern of spiking up. Look at the last gap in February. Right. And there's a move that already started, but this is still leg A. Same thing. So it's leg A, and it goes from the 132 area, and it gaps up and it goes all the way to 149.92, and 2.5, 3 weeks later, maybe 4 weeks later, where is it? It's down to 121.11. Then it goes in a beautiful peak A, peak B. It goes to a peak C1, C2, pulls back, and that goes all the way to 147.95. And now what does it do? It pulls back, and it comes down in almost the same number. Look, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 days. And here it goes, well, if it was C2, it would be 14. So we'll go 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. Oh, 15, 16, 17, 18, 19, 20 from that. All right, so it's taken a longer time. It's had a smaller pullback. The last pullback actually turned out to be a gap to the downside with volume. That's a beautiful volume, a climactic volume buy signal that gives you, in my work, gives you 28 or more days or bars to the upside before it comes back to retest. It's done. You know what? I think that you have your eye on something here that has the potential to move up. But okay. I would only start, I'm going to ask you to do something that's a little unusual. Wait the entire day. Okay. And wait until tomorrow morning, 5 minutes after the opening bell. If I'll give you the exact ranges. If CPA closes today, well, I'm going to give you a scenario right now. If you want to just start right now and nibble at 140.88, I suspect, because it's held for 2 hours at the halfway marker, that on a worst case basis so far today, that it could pull back to, it's at 140.88, it could pull back maybe to 139.50, And if it broke 139.50, I'd say, you know what, get out and hold off buying. Then the second thing that I'm looking at is you could completely stop doing anything with a stock today. Just watch it closely. Why? Because if it holds and it closes back into the wick that's showing right now in this 120-minute bar, and it closes in the 141.83 area, or it pulls back sharper and it closes at 138, the reason why I say hold off and wait for the first 5 to 10 minutes tomorrow is that if tomorrow the general market gaps up and this is acting well, it should participate. If it doesn't participate at all, then I'm going to say to you, hey, hold off. Don't do anything with the stock. So the risk is you have to buy it a little higher, or you're going to nibble on its starter position today. I would still put in a maybe 2-point stop, a 3-point stop, and then the whole scenario is repeated tomorrow. The opening bell, wait 5 or 10 minutes, see how it reacts or acts to the marketplace, and if it's moving with the market up or with the market down, then you're going to have to put your stops in. But you need until probably Tuesday or Wednesday of next week to see whether this is now turning, making a U-turn to start to fill the wick that it's made today at 144.27. It's at 140. Let's call it 141 right now. And if it does that, then it's going to go back and retest the highs, that peak C1, C2 at 147.95 and 147.46. So I think it's real easy. Tight stop. If it works, it should work. Wow, it should work by Friday afternoon, Monday morning. It should be on its way to the 144 to the 146 area.
Fantastic. Well, thank you so much. You're great. That was a great way to look at it. Thank you so much.
Thank you. The one thing I'm just going to say, we were talking about the entry point. Why? Because we thought that if it was to break to the upside, it would have some legs. If this thing fails and it goes to the 136 to the 135 level,
right,
I'm saying to you, you know what? Trading range, I don't think it's there. It's not your kind of stock. It's not doing what you want.
Wonderful. Thank you so much, Basil. Have a wonderful day.
Thank you very much for calling us. Now, here in Safety Harbor, Florida. Now, I've got a couple of questions. Let me go through them one by one. The first question was, I want to do this. Okay. The first one was SCTY. SCTY, that is Musk's stock, Solar City. It's a solar energy company. Had a very good report today. Spiked up. It's up 8.30 at 56.01, up 17%. Well, the email was that talking about the South Africans. Maybe tomorrow I can find that email, and then I will be able to talk about those South Africans that I was talking about yesterday. I just don't have it in front of me. And Solar City. I played the lotto yesterday into earnings using options. I have my stops. What do you think about going long using the commons for a swing trade? I will listen to the show. So this is what I'm going to suggest. I think this is early in the move off the bottom. And that bottom has come at 45.79 after hitting 88.35. So like many of those stocks, this is a momentum stock, even though it's in a different area to the high techs or any of those, 88.35. Because it's in that area and it's had such a massive decline, my thinking here is that you've talking about the lotto, I think that was a fantastic trade. I have to congratulate you. But what I'm going to say to you is, I believe that it might be a situation, I don't know if you've taken off all your options. I would keep one call position, and that would alleviate my coming up with so much money to get into the stock. And I'll explain, there's only one reason why. I would have called this a volume spike that can give you 28 or more sessions to the upside before retesting, but there have been too many volume spikes. So this one, it doesn't count. Pity, because that would have been at least a comfort to me. But it has gone down into leg D, potential D, or it's restarted a down mode. And that D, let me just see what the numbers are. Yesterday's low was 45.79. 45.79. So you're talking about a stock that's 11 to 12% off its low. Oh, I'm writing in the wrong place. 45 for. Got to get this right. 45.75. I think that's what I said. And most importantly, I suspect 45.79. Sorry, it's not a 5, it's a 9. And this is leg A. So here's my recommendation. I recommend, if you haven't taken off all your options, to try to keep just one, as if you were holding a position in it. That's number one. Number two, if you got into the stock, it's almost like I was going to say to Nahid, the same sort of thing. The 120-minute chart, if I can just pick it up right here, says to me that if it's able to hold into the close today and not break under 55.25, give it a little room. Let's call it 55.10 to 55, that support in the 55s by the end of the day, but instead it closes near where it is now at 56.19, preferably a little higher, closer to the all-time high. That would be fabulous. If it starts to pull back, and for whatever reason it gets into the 53 to 52 area, it's got that single leg up syndrome, which I really don't like. And that says to me, just be real careful. Why? Because it might just be filling in and making another arch formation, because although the earnings were good, there might be something going on. Now, I don't want you to lose out on a potential when you've got in so beautifully and you've got a nice cushion because of those options. That's the reason why I would suggest you hold, if you're out the options. First of all, congratulations. That was a fantastic trade. Good eye, good everything. Solar City, folks, we're looking at SCTY trading at 56.13, up 8.42. But the stochastic has made a W formation, and that's a positive. The on-balance volume went a little too low, but it is making a V shape at the bottom. That's the blue line if you're looking at Tiger TV. Now, the MACD is the best thing, but why did it break down where the MACD was doing so well? Well, all I can say is where it is now makes sense. Where it was yesterday at the low didn't make sense at all. So here's my recommendation. I would get a small position in Solar City. I would not get you were indicating that you really wanted to get a good tradable position. I'd rather get a small position, and I would add to it, and here's the pattern. You would get the small position, and you might have to give up something because it gets away from you. But if I'm correct, it will come back after a bit of a move and retest the 200-period moving average, which right now is at about, I keep hitting that bar. Right now it's at, how am I going to stop that happening? At 55. So I suspect it will rally maybe to the 57.5, 58 area. Then it could pull back. That pullback, where it stops, is going to tell you whether to add. And then I would add, if it holds very nicely in the, say, the 54 to 53 area and doesn't break down under that, and then starts to move higher, I would add another trading position. And my only target would be the previous high of 61.90 that was made on the 22nd of April. If it goes beyond that, then one of your positions you can have a very tight stop and keep the call. I'm not sure I'd go full right into this. Right now, I wouldn't do it. I would definitely start a position, and that's the trading plan. So I'll be back, and we'll be talking about the euro as soon as I get back. And we've got Marvin Orlando wanting to talk about Twitter. I'll be back.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi,
I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, everyone. We're back. We're back for the last segment. I will be doing Larry's show. I'm able to do that, but I will have to leave early for the very last segment. So this segment that we've got right now, in the next hour, I will not be on for Larry's show. I'll just do the entire first 50 minutes, and then I have to leave early. So I'll take a lot of the questions I don't get to hear. I will also do them in Larry's question. Great question in the den about what would happen with the breakout, and we'll deal with that. We're on with Marvin in Orlando. Marvin, you want to look at Twitter?
Yes, I do.
Okay. Do you have a position at all?
No, not yet.
So you see, the difference between LinkedIn, which is what I was discussing yesterday, and Twitter, LinkedIn just stopped dead. Right at 150 is the 9-period exponential moving average. And Twitter went to, if I can get my 120, went to 151.61. Just about to the pennies. It went just a little over. The difference between the two is that the history of LinkedIn, the chart history for me, is being much greater. I think in terms of the products, I don't go to either one, so I don't really know. I'm just doing this off the top of my head from what I've heard. My suspicion is that LinkedIn has a greater body of a greater potential for profit than Twitter at the moment. That's just if I'm correct. So as two different stocks, one is trading at 149, and the other one, Twitter's trading at 32. There's a big difference in price, but it doesn't mean to say there's a difference in. This is something that took a long time for me to really. I understood it, but intellectually, but until Kramer just kept insisting that people have to understand that a stock, because it's very high priced, doesn't mean to say that it's overvalued. That's really the issue. And I think in value, I'm looking at Twitter and I'm looking at the chart pattern. I say, if you want to get in, it has to be thought of as a trade. It might turn out to be something much stronger. So here's my suggestion. There's a chance that these momentum stocks are going to be what keeps the market buoyant a little bit longer, so that we're finding it all the indexes making all-time highs by tomorrow or early next week. Then I think we must be ready for some kind of a pullback. But we might now find that the pullback includes the Twitters, the LinkedIn, the Amazons, the Googles, the stocks that just got beaten down next week as the general market, the New York Stock Exchange, which has been on a tear, looks fabulous. Those stocks take a breather. So I'm going to make the suggestion here. If you're prepared to think of this more as a trade that can reverse on you at any point, because the selling has just been intense, and this kind of selling invariably produces that H pattern, a bounce and then a retest, I'd play the bounce right now, 32.69. I'm not going to, usually I'd say a small position. I'm not going to tell you what position to take. I'd rather tell you to have a pretty decent stop and a lock in your stop, because if it takes out today's low, obviously that's really not good action, 31.13. I probably, for part of the position, would make the stop on half of my position really tight. I'd make it 50 or 60 cents, because this has to work after such a beating with the Dow up 95, S&P up 10. Twitter needs to get going. So that's my recommendation. If you're comfortable with that, then here are the numbers that I'd look at. I'd expect that if Twitter can hold the low of the day, that's today, having gone to 29.51 yesterday, it shouldn't even come back to 31 to 29, not for at least 6 to 8 sessions. And if it's able to rally and get into the body of that ugly candle of the 6, in other words, if it can get into 33.89, that's another point and a quarter, I think you've got yourself a really good trade in terms of a bounce. And then 36.37 is where I'd be careful. So I hope that helps you, Marvin.
Thank you very much.
Thank you very much for calling. Folks, I'll be back, and I will spend time on the currencies. We've had time now to look at how that 200-period moving average is holding in the euro-dollar currency pair. But I'll be doing Larry's show for about 50 minutes. Stay tuned. I'll be right back. And
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.